Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Lunch, it's time for today's trending ticker and the most searched name on the entirety of CNBC.com's website this afternoon. It's not glittering gold, it is shimmering silver. The precious metal has doubled over the course of the past 2 months, hitting a new record high today after surpassing $100 an ounce and now trading above the $101 mark. These are all record levels for silver. It's not, though, the only commodity that's rallying. Other names, like gold, of course, platinum, palladium, are each higher and approaching their respective all-time highs as well. So let's welcome in our next guest, Philip Streible, the chief market strategist over at Blue Line Futures, to help break down what's been going on in the metals trade, specifically with regard to the precious ones for right now. Philip, when you look at these charts, how much can they go further to the upside?
Well, I mean, we see a scenario where gold futures could hit $5,500 in 2026. We see another scenario where futures on the silver market could hit 115, 120 based on volatility. It's really driven by that continued central bank buying, the private investor ETF flows, the Fed easing. We expect 2 interest rate cuts, the first one in June. Also the focus with that next appointed Fed chairman. So you get 2 main structural drivers that continue to support and strengthen gold and silver. It's a central bank buying. They're diversifying away from U.S. dollars and other currencies. We saw Poland this week add another 150 tons. Meanwhile, India is cutting their U.S. Treasury holdings. They're taking larger stakes in gold. And then you get those ETF flows, and that's where silver comes into play. So we're experiencing multi-year increase in gold ETF holdings. Individuals, institutions are really cementing it as a portfolio of strength or a position within their portfolio. So the 60-40 portfolio, really it's dead here, and they're adding these strategic commodities such as gold, silver, and copper for portfolio diversification to help fight inflation and also geopolitical risks.
Yeah, I take the philosophical point 100% absolutely. But I mean, I see longtime market observers saying, kind of now telling people what to watch for when the rug's going to get pulled out. And we know there's a lot of hedge fund participation in these trades. That hot money can come and go very quickly. So as soon as there's some kind of margin call event, I mean, this just can't keep going up the way that it's going, Philip, for much longer. And I'm not saying it goes, down significantly, but some kind of reset. So shouldn't people at least wait for some kind of better entry point than jumping in right now?
Well, yeah, the question is, could prices pull back? And while some pullback is reasonable after such rapid gains, it's the fundamental underpinnings of these metals that sustains this type of rally. Could gold fall 10%? The average true range on it is like $95 a day right now. Silver is $5 a day. You strap together 2 straight downward days in those markets, you're going to see a massive sell-off there. But the leadership of things like silver really reflects the broad repricing of these metals. So you've got multi-year supply deficits, industrial demand, investment demand. It creates this perfect storm where this demand outpaces that supply and it pushes prices to record highs.
Now, Phil, the other, I guess, maybe participant in this whole thing, outside the hedge funds themselves, are some of the market makers and the people who are actually selling some of these products to the market here. They're short, in essence, for some of these things. Is this possibly part of a larger short squeeze that's going to affect some institutions at some point who are on the other end of a rising price in silver?
I mean, we've seen that before. We've seen it play out in other commodities like natural gas and some of the smaller commodities out there where you do get that type of squeeze in play. The reality is that, I mean, those are hedges that are on their books that at some point will have to be realized and will have to be unwound. Do they have the physical to back up a lot of these paper shorts and things like that? I mean, we were seeing it in markets like platinum and silver making new highs right now. I mean, platinum is a much smaller, cheaper alternative towards gold. That market size is very tiny. You've got 70% of platinum comes from South Africa, where they've got electricity outages, aging transportation. So the process of moving platinum from these mines to the end user really creates that scarcity and tight inventories. Russia's the other big player. They account for 10% of the global production. So it's that scarcity and the widespread application that we're seeing with AI and everything else that's really making this a unique situation in the metals.
All right. So you just kind of addressed maybe part of my next question, which is many of these precious metals have these industrial applications. So when it comes to things like the platinum group metals, palladium, gold, silver, which one has the better fundamental case? They all have fundamental cases. Which one has the more upside when it comes to industrial use, given this AI/clean energy economy that we're evolving towards?
I mean, copper is definitely the backbone of the metals complex. And look at the global economy has been taking off. Copper is one of the best reflections of that. We've seen a number of supply outages in some of the world's largest mines, and that's caused a bit of a squeeze. But you get this trade concern, which has drawn global copper inventories into the U.S., and it tightens conditions broadly and globally. It's the global transition here of clean energy, electrification that is really driving the demand for copper. You've got the EV vehicles, you got the data centers, the AI, the renewable energy, and they say that the widespread, the grid and the power infrastructure is going to drive about 60% of global copper demand growth throughout the rest of the decade. I think that that's where your longer term play is. I look at it like number of horses in the race, and I think that gold and copper are kind of my two that I stick with all the time. But it's, you know, it's the silver, it's the platinum that are the outliers that go there, and they're playing catch up and they overshoot.
Yeah, overshooting is especially, and a lot of people are drawing lines to what's going on in Japan, and I think there's more work on this to be done. But Phil, for now, thanks. We appreciate it. Philip Streible with Blue Line Futures, Chief Market Strategist.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ a research analyst or maintain a research department as defined in CFTC Regulation 1.71.